Good morning and welcome to the Monday Market Update. I'm Nash Paradise, missing my buddy Andrew Cady while he is out celebrating his big, giant June and on vacation, having a lot more fun than I am, but I will be out next week. So I've got someone really cool that's going to be jumping in and doing this who is a little bit more fun, definitely better looking than me and wears much shorter shorts. So getting into it, let's talk about what happened last week, where interest rates are going and where we've been. It is kind of an ugly finish to the week as far as where do we start and where do we get to. But a lot of this is due to the fact that we started significantly lower. We had, basically the end of the previous week were the best rates that we had seen in a month. So getting back into where we are right now, starting at 6.52, ending at 6.6, it's still in that prevailing range. Mid volatility is what we're calling it. There was one day of good movement, and that was from the 30th. So you can see like from the 30th into the first day or two of July, we just kind of ran off that end of quarter selling and are back where we are here at the 6.6 mark. So mid volatility, let's talk about what happened. It was a short week with a holiday week. And anytime you have a combination of a short week and in this case, the end of second quarter, you're going to run into some selling generally. Bond traders are going to be getting their last bit of stuff out for the quarter. And, that's exactly what we saw on the 30th. You would think that we'd have had more important data hitting based on the selling volume, but it was really just the jolts, the job openings. And they came in right around estimates, 7.959 million versus 7.3. There's plenty of job openings right now, and that's a mark that's been in line. It's been fairly consistent month over month. So, we don't really consider that like a strong jobs report. Getting into more of the week, the interesting stuff we have here, ADP came in a little short, 98,000 versus 113, but really the big data that we were going to see was going to be Thursday. Thursday is when we had non-farm payrolls. And NFP is where we're talking about things could miss one way or another and be fairly significant. And it did miss. It missed low. It just wasn't significant. No one really cared. Maybe it's because it was, July 2nd. I don't know. But they did not particularly care here. So we got 57,000 on jobs added versus $110,000 estimate. The previous was revised down to 129,000. So you would think, with fewer jobs added, with the continued claims, jobless claims being up higher, that we should be, a little higher on unemployment, but yet unemployment dropped from 4.3 to 4.2. So good luck making a lot of sense of that. The data is not always necessarily congruent at the same time for the same period. So that's why no one really cared. There was not a lot of movement. It just wasn't that impactful. But non-farm payroll is coming in low. I think it's significant. It's something to keep our eye out on as we get moving forward. Let's talk about what's going on this week. So not much. Today has got the biggest day-to-day of the entire week, and that's ISM Services PMI. Now, I'll be honest, I don't think it's that significant when I think it's because it's the only thing. ISM PMI is fine, but we already have it. It's already in. Target was 54, actual is 54.0. So we hit right in line with it. No real movement then, and therefore no major movement so far today. As far as anything else that's coming in later, we've got different jobless claims and continued claims coming in. Probably, I mean, they're not given as much weight as the ones that we got from the BLS last week. So we'll take a look and see what happens there and see where we're going. But like I said, we just got jobless claims last week. So looking forward, talk about the Fed and what's going on with Fed funds rates. And we like to put these side by side now just to kind of show where we were and where we are now. What are the trends? So as we're trending going forward, the next Fed meeting is the end of this month. We are moving towards no change right now. And that's what that first section is. 729, 75.95% aggregated estimates show that we're staying in this 350 to 375 bucket. And we should. There's not really any good reason for that to change. And going forward, this is where we're going to be tracking these. Interestingly enough, we're moving away from the certainty on the September rate hike. We had a couple of members of the Fed give speeches last week. We have a number of economists who are saying in order to get inflation down, rates need to go up a little bit. So we're still showing the likelihood of an increase in the next meeting in September, but that likelihood has dropped from 73% to 66%. There's a chance we could hold steady for another session there in September. So we'll continue to watch and see where things are going on this specifically, because the interesting thing is, how is this changing week over week? What direction are we moving to? And that's why we're now showing you both of these side by side. We are moving towards more holds and more wait and sees. Will the market respond to that? I don't know. I have a feeling as soon as we get into that first rate hike again, we're going to see the market move pretty significantly in the weeks up to that point, most likely not in reaction to it after the fact. But as we get into changes, the market tends to react. But for right now, looks like we're holding steady. Getting us closed out here, talk about where interest rates have been going. We've been joking about this up and down, up and down, up and down. We've been hugging this 6.6% mark for a while. Not as much as we were hugging the 6.25 before, but we have been holding steady in this zone. We are still in this zone. Every time we've had a decent sized drop, we've had something else come up. We've got no real good drama coming on right now from the geopolitical side. I mean, that could change in an instant, but as of right now, that is fairly strong and on some foundation as much as it can. And so everything is going back into data, and all the econ data is a little incongruent. It's a little up and down right now. We're going to need a few more weeks before we really get an idea of where things are going forward. So my forecasts are we should continue to hug around the 6.6, maybe some small changes like intra-week, but there's nothing, we're not waiting on anything to make a severe change right now. We're just waiting, sitting back and waiting and seeing and reacting from here. So to kind of summarize what happened last week, a short week, not a whole lot to talk about, not a ton of econ data, not a lot going on this week either. So smooth and steady is good. We hit the best interest rates that we had seen in the previous 30 days a week and a half ago. We have walked back from that a little bit now. We're still in a spot where, people are buying, where people are taking action. We're right in the middle of the midsummer session when, at this point, looking at home prices, like that's the bigger story is in your market, are things holding steady? Are they starting to soften a little bit? I've seen lenders putting out advertisements showing, hey, I closed this many loans, but this many had seller concessions. The total amount of seller concessions we got was X amount of dollars. Leaning into different levels of marketing and how the market itself can be a really useful tool to convey to buyers what's actually going on right now. What does this world look like? Because capturing those people who need those seller concessions, who need that house to be $20,000, $30,000 less than it was last year, that's going to be a great target. That's an awesome niche to work into, and I highly recommend that. As we're going forward, any kind of communication to agents, partners, buyers, there's just not enough great econ data. There's not enough to talk about on future Fed moves. There's not enough on the war with Iran. So find something that's relevant in your market. Figure out what's going on, where are home buyers winning, and communicate that. I'll miss all you guys next week, but I hope you have a fantastic week. Go lock some loans, and I will be back in a couple weeks to break down what happened then. Appreciate y'all. Take care.